Tesla's crashed, Nvidia's on the ropes, Bitcoin beneath 90K. Is this the beginning of a much broader meltdown, or is it time to become greedy when others are fearful? We've got earnings, inflation data, and geopolitical events shaking things up. Where are we going to turn to get answers? Well, we're going to the charts today, and I'm going to give you guys a lightning round of top picks and top plays. And I'm going to let you know whether or not we got to let these continue to cook, or whether they're ready to begin to take some risk on, or at least what I'm doing with my money. This is the Stocks with Josh show. Thank you for joining me. Thank you for hitting the like. Thank you for dropping a comment and just saying hi. Appreciate each and every one of you guys. I chart, I invest, I scalp. Hit that like and subscribe to get more. All right, let's talk about some big earning movers today. Home Depot led the way, showing that the consumer was still resilient, making home improvements. Initially on some soft guidance for 2025, the stock dipped, but quickly rallied and went higher throughout the morning. And then we've got HERS. This is the stock ticker HIMS. We've talked about it a few times in the last week, and it absolutely got obliterated on weak guidance. Now, I'm going to take you into the chart here in a little bit on HIMS, because this is one that I think is attractive at these levels. We're watching the candles at support. We're looking at strategic levels of support, and this is one that I think might be worth nibbling on. Krispy Kremes. People love the donuts. They just didn't like the forward guidance. This stock was smacked down 25%, and I'm concerned there's still room to the downside on this one. Super Microcomputers tanked 13%. They just couldn't get their act together and get their filings in by the deadline, and the stock fell. Now, this is one that I think is going to continue to have huge price swings, as it could just as easily, they could get that filings in a day late, and it could look good, and it could be back ripping higher. Accounting red flags, but great AI exposure with SMCI. Those were your big earning movers for today. Let's go look at the Stocks with Josh trade setup moves that happened this morning. I dropped more trade setups than usual. I'm going to lightning round take you through them and show you the charts. You could have taken any one of them and you would have profited, but there was a couple that did a little bit better than the others. I'm going to tell you what I think of the stocks. We're going to look at the move, and I'm going to give you guys my view as to whether we got to let these cook more to the downside going into tomorrow, or whether or not they're starting to look attractive. Let's just start off with the SPY. So this was the move from 596 to a quick move down to 592. All you had to do was take the trade. This printed hard to the downside on puts, giving few green candles. But if we take a step back and we look at the big picture view, this is a somewhat looking reversal candle today as we've moved closer to the end of the day. This is the type of candle that I told you yesterday that we didn't have. I said we need to get a candle with a giant tail on the end of it, a huge buyer's wick, right? And that's what we've gotten now. And so at the moment, I would say that even though we haven't gotten a green candle yet, this is setting us up nicely for a potential move higher going into tomorrow. All right, let's take a look at SMCI. What I see here is a bearish flag, and so I am going to say you got to let SMCI cook. There's more potential room to the downside. My initial target is 42.90. And Home Depot, the play there was a cross of 389.50 and a move up to 395. You can see that we got up here, had a little consolidation, and moved higher all the way up to 401. This is doing the opposite of SMCI and appears to be providing a bullish flag. I see a potential for a move higher if we get back above 395.80 tomorrow. Look for a continuation to the upside. Now, HIMS, as we dropped, what I want to point out to you guys here is that we have a doji candle at significant support, which is right back here. Now, we could come down a little bit more, but I'm telling you that this move to the downside is looking like it's attracting some buyers. And so tomorrow, this is one that I think might be buyable if we get another dip, but very, very close to taking action to HIMS to the upside. Now, Tesla was, again, the biggest winner of the day, and it was such an easy trade. All you had to do was enter puts, and this absolutely fell off the cliff. You were skydiving in these puts to profit, and with a nice soft landing, you didn't have to cut early It was a beautiful trade. Now, I know what's happening, that folks are just scared. They're in a position where they've got some money locked up and they don't even have money to trade. And that's a huge problem. I talked largely in January about selling the rips and getting prepared to take advantage of the traders market that we were moving into. And some of you did. Now, some of you did not. And I just wanted to comment. You're here listening to me. I'm sharing my years of experience with you. I shared that theme a lot in December and January as it relates to stocks and crypto. And I think very, very few people took action. And there's still too many of you guys not using a stop loss and not controlling position size. Some folks are just coming to this page for the next hot winner. But what I've learned is that you think that what you need to do is to know what to buy and how to buy it. And if you do those two things, you'll be successful. And I'm going to tell you that you won't be. This is more of a game of consistency and discipline and being in the right place at the right time to take the right trade to have the biggest wins. And that's what Tesla was today for me. Being able to ride this thing short in a extremely red market that was crashing. Tesla printed. Let's go look at the chart and I'll give you my opinion as to whether this has still more room to the downside or whether it's starting to look attractive for long-term buys. Okay, before I share my thoughts on this trade, I just want to do a woulda, coulda, shoulda from back in the day. You guys know that I shorted it right here on the last earnings in preparation for what I believed was overall weakness. And the very next day, it gave us a very strong green candle, which was just a huge fake out move. And the real money was to be made in those shorts, but I got in just a bit too early. But I would say that we've captured a lot of this down move, and this candle just went into full-blown acceleration move, getting us all the way back to 300. I was asked in the Discord the other day, Josh, did you buy 324? And I said, no, I just didn't like the candles and I didn't like the environment. And as I said to you then, that we would evaluate how this is performing when it got to 324. Well, it made sense to hold off because today we hit 297. Now, the big question would be, are you buying this level? Well, the problem I have is that this candle is not really showing us any life. Now, for example, when we're looking at the SPY, we have a very, very nice tail on that candle. When we're looking at HIMS, we've got a very nice doji tail on this candle. Unfortunately, Tesla's closing the day out near the lows. And I have to wonder whether or not we're going to come back to this level of 270, which I identified to you guys not too long ago. Now, there's no guarantee that it'll get down here, but here's the issue that I'm having, and I've been letting people in the Discord know, there's no support in this zone. And so even though we don't know if it's going to get down here, we know that there's no support right now, and we're not seeing an influx of buyers. We're seeing an influx of sellers. And so at the moment, we've got to give the benefit of the doubt to the downtrend, trading the trend that we've really been on ever since December of 2024. This has really just been a falling knife, and we've got to assume that we're going to continue to see it fall until we get some green candles. But that's the bearish story. Let me take you into the bullish story on Tesla, and that's the fact that every single time, if you had bought the oversold position on Tesla, it was pretty much a good idea to buy. Tesla got oversold right here, and it had a move from 194 all the way up to $264, and so there was a $60 move up. Tesla got oversold right here, and there was a ultimate move from that being oversold. You could actually say that this move all the way back to here was the next major event for Tesla. And so even though this wasn't the bottom, ultimately when it gets oversold, it is signaling you that there is potential coming ahead of it. Now, we also got oversold here and here. Both of these would have been buy signals in a good price range to ultimately realize this brand new market top. And so what that is leading me to believe is that we're oversold now on the daily. And this is the second time we've gotten oversold. And so clearly it tells us we're pumping down. And there could be more room to the downside. But ultimately, I believe when we take a step back, we're going to look at the future and see this as a good buyer's range. I believe that tomorrow, ultimately between 280 and potentially even as low as 250 is going to be a range that is going to make sense to take risk on Tesla. So this is one that I'm going to say we have to continue, let it cook to the downside. And I don't believe, even if we see a green candle tomorrow, I'm not convinced that we're in a V-shaped recovery moment. We're in a scared market that is running from stocks, running from growth stocks, running from high-risk stocks right now. And if NVIDIA is not safe and other high-quality companies like Meta are not safe, HIMS, which has been doing so well, up 200% in 30 days, Palantir, if these are selling off these desirable companies, then what does it tell you? It tells you that the market's looking for better prices, better valuations. They sold up higher than you, and they're waiting for it to come down lower than you. And so I would say that Tesla, it could be in a spot where you could begin to nibble. I've been nibbling on some plays. But as far as bigger purchases, I think this one, we've got to let it cook. Give it a little bit more time, and don't feel the FOMO, because Tesla is going to take some time to wash out the bottom. Now, the next one I want to show you is Palantir. I got an opinion as to whether this one needs to cook a little bit more. Let's go look at that stock. Okay, well, if you guys are following me and we're considering candle theory, we still have a problem here, and that's that we don't have a candle that reflects buyer interest. This candle is reflecting seller interest. So the buyers haven't swooped in just yet. We're seeing the red selling volume go down, and so I do believe that we're getting close to the range, but I'm going to reiterate the range for you. I believe the range is between 85 and 80, possibly a little bit lower, and 75 is the spot where we would have to have a stop loss, because this is the spot that if we fell beneath, it would be signaling a much bigger move down. And where could that possibly go? Areas of support beneath 75 is 53. You have to remember that these huge winners that ran up very quickly, similar to Tesla, because they ran up so quickly, like HIMS and other ones, they don't have areas of consolidation where there's a lot of buyer and seller transactions that would give it a area of support. Okay, they don't have that. And so when they begin to fall, they just fall through all of those levels until buyers begin to show up. And it's not going to be the retail buyers that stabilize these stocks. It's going to be institutional interest. And right now, institutional interest has been in selling and increasing the selling pressure. But I do think that based on Palantir's recent earnings, I have no reason to believe that that $75 level that is oh so critical technically, I'm referring to it as the point of control on the chart, I have no reason to believe that it'll be broken through, but I want you to consider a stop loss on anything that you take risk on. And I know it's tough because when you buy, let's say today, and it goes down and you get kicked out on your stop loss, well, then you have to realize that loss. However, a stop loss would enable you to take risks when it becomes even more attractive to take risks. And the fact is that if Palantir did, for some reason, get all the way down to 50, and I'm not predicting that, that would be a very attractive place, and you would wish that you had some money to take advantage of it. So we've got to stick with our disciplines and stick with the stop losses. So I do have a couple other stocks to go over with you, but let's talk about what exactly happened with this market today, what moved the markets. We're dealing with consumer sentiment reports. We got another one. It dropped to 98.3 versus the expectation of 102.5. Why did it drop? It's the two big factors that we've been talking about repeatedly, which is the concern of rising inflation. And we'll get some heads up on that with the PCE this Friday. And so we could have our turnaround rally moment on Friday. And let me just share with you what that might look like. Okay, we're getting the PCE, the Personal Consumer Expenditures report on Friday. And what this could look like is that everybody knows that it's actually not going to come in line with expectations, that it's actually going to show that inflation is sticky, but the fear And the worst part of it is getting priced in right now, so that by the time we actually get the report, we could see additional downturn that quickly flips to people getting back in. Again, I want to remind you that Wall Street wants to be in these companies because we're living in a time of expansion. However, they want to be in at the right price. They took profits up above and they're going to buy back in here soon. You want to make sure that you get in closer to when they get in. Now, some other dramatic news out of Washington that affected the markets was Trump's tariffs, which are back in place on Mexico and Canada here in March. This is one of the bigger reasons, along with the sentiment of the consumer sentiment report and the fears on inflation. What Trump is doing with these tariffs is concerning the market. It does affect some of the plays that we've been looking at, CVE being one of them. So this is an ongoing concern. But again, I'm going to lean towards believing that it is not to Mexico and Canada's advantage to fight their largest trade partner, which is the U.S. We've got much less to lose than they do, but I do believe it's all going to get worked out, and this will also give the markets a reason to go back in and begin to buy. Then we've got the fact that U.S. is tightening NVIDIA chip exports to China. So the Washington versus Beijing battle continues, and we're going to be sweating that out as we get NVIDIA's earnings tomorrow. Will NVIDIA's earnings be enough to absolutely shock the market into an early rally? Well, I'm going to say the same thing. It's all going to come down to a market that's looking for a more attractive price entry, and we're going to be following basic candle theory to know when they've decided that it's go time, when it's buy time, and it's going to be those candles with long tails on them and the volume spikes that go up. Remember, we want to see buying volume at these levels to convince us that this is the time when we're actually going to have a reversal. And again, I do believe that we're in distribution, and distribution can make new market highs, which means that we could still make brand new all-time highs on every single one of these stocks that we're covering today, because that's normal in distribution. So we have a market in extreme volatility, Bitcoin beneath 90K. We're coming to the end of February, and if you guys have followed this page for a while, you know that I've said that if we get a monthly candle close beneath 90K, then it's over. The top has been booked. Now, ask me if I think that that's how this month is going to play out, and I do not. I believe that we're getting ready for a fierce and violent impending pump on these markets, stocks and crypto, and we're getting very, very close to it, and I will be increasing my risk positions as we move closer to the end of this week. I think that the trigger is going to be the PCE this Friday, and I think we'll see signs of stronger stocks showing relative strength on Thursday. Wednesday, we've got NVIDIA's earnings, and it's going to tell us a lot about the AI story, and it's going to give us some confidence or restore our confidence in a lot of these AI tech companies. We're here at the tail end of this video. In a few moments, I'm going to tell you some stocks that I did buy today and that I'm nibbling on. These are top picks for me that I believe have already showed relative strength. But before I get to that, let me just take a minute and show you a stock. This is the fourth time I've showed you this stock in the last 2 weeks, and I think it tells a story, and I bet you can guess what it is. Yes, we're talking Apple stock. Let's look at that chart. Now, Apple at the moment has been showing a ton of strength in the face of an extremely weak and red market. And today we actually opened and closed a candle above this area of resistance of 247. Now, we have to watch this very carefully. We've not had two red candles in a row on the daily time frame. And each of these candles, even though they're red, they've actually made a higher closing price. And we've gotten another higher closing price today. Now, here's the story. On every strategy, you have to have a stop loss. The stop loss that I think makes a ton of sense for Apple right now is 244. But overall, this is climbing, and we do have a W pattern. And I do believe that we could come up here and retest the top and even go higher, right? And so I just want to continue to draw your attentions on Apple, because as Apple goes, so the whole market goes. As January goes, so the whole market goes. Apple's up here in February. January closed as an up month. We're having extreme volatility, and I believe that we're still in that environment going into the end of this week until we get that PCE. I think we could continue to see a lot of these companies come down, but Apple is telling a different story. It's telling us that there are folks that want to rotate into high quality companies, and it could be pointing the way of a market in recovery. Is NVIDIA still a contender for that #1 spot? Well, right now, Apple's in the lead, and we're going to see how it all turns out Wednesday. Guys, I appreciate you joining me. Thank you for hitting the like. At the tail end of this, these are the companies that I bought today: Amazon, NVIDIA, AMD, Intel, Meta, Snow, Reddit, and MicroStrategies. Yes, MicroStrategies typically has been an excessively hot company, high risk, but I believe that we're going to get that final push on Bitcoin, possibly up to 116, and it could be right around the corner. And with MicroStrategies hitting these extreme lows, it was worth taking a little risk. You'll get more details on all of that in the Stocks with Josh Discord. I've been providing a lot of technicals for the levels that these could possibly be coming down to in the Discord throughout the day. I also shared my current view of hot cryptos. I refreshed that chart for you guys, giving a fresh view of where support, resistance, and take profit would be. Hit that like and subscribe and drop a comment and let me know what your next move is. Peace and blessings. Take care. I'll see you in the next video.